Boom, we are alive, Bear family. Hope you guys are having a wonderful evening on your side in the West, or just waking up over here. Taking a look at Bitcoin's price movement today, we seem to be forming a nice horizontal range. At the moment, actually, the supply signature is in favor of demand, which is quite nice. We see a larger movement to the upside with the equal amount of supply coming into the market. So just as an example so that everyone knows, if you guys have been studying, you'll know this. But in the Wyckoff methodology, what we're looking for is this change of signature of supply and the amount of price movement that comes after. So here we saw this amount of supply come in, push the markets down to around 84,000. That same amount of supply come into the market, pushed the market higher than the previous drop. So we see a slight increase in the price to the upside in that same amount of supply. So here you see that test version of that. Now we've been building this kind of secondary support range along the middle of the VPVR here, but I suspect that we actually come back down to test this one more time, and this is going to give us much better data on whether this is redistribution or reaccumulation. So we can't just tell by the horizontal accumulation ranges themselves. We actually have to pay attention to the supply and demand signatures. Here, though, we see that the demand signature to the downside is actually increased. So a huge amount of supply coming in, price range only minimally to the upside, the reduced amount of supply coming into the market, increased or equal to the amount of price to the upside for the massive amount of supply coming in. So I suspect that we come back down to the bottom of the trading range here, somewhere around 84,000. I was originally looking for a move up to 97,000, and the fact that we're not getting that earlier, it could actually be positive. So with the bear claw rolled out here, which is our simple moving averages and our exponential moving averages, we're currently testing the bear claw on the 2 hour and holding it, which is a positive sign. But on the 4 hour and 6 hour, where I'm more interested in the data, at around 98,000, we still have that upper resistance point. But I would point out the fact that we're not getting there too quickly is a positive thing. Often what would happen in redistribution, and this would be the downside, is if we jump up to 97, 98,000, and then we come all the way back down into the middle of the box, can't close above the VPVR at 91,000, and then we come down lower. If we actually come down lower here first, stay within the range, and allow the simple moving average to become effectively the bottom of this range at around 84,000 and the top of the range at around 94,000, then it's likely we could continue with a bullish scenario. So we have two different likely scenarios here, I think, for the potential breakout or breakdown, because we won't know if this is redistribution until the next move, basically. For now, we actually see, again, some type of increased supply or demand over supply characteristics. But if we shoot up to 97, can't close, and come back in the middle of the box, we're definitely going to be hitting redistribution. So it's important to note that when we're watching these trading ranges, the point is to not try to guess before the final steps come in. Phases C through E, or CDE, where you have the spring, the kind of LPS structures, or the LPSY structures, or the upthrust, I guess should be the opposite of the spring structure. It's like a spring in reverse. That's where it goes to the upside and then comes down instead of going to the downside and then coming up. These are the kind of final indicators. So it looks like we're getting close to that. It looks like we're hitting the first part of the secondary test here after our automatic reaction and secondary test at the bottom. So finding out if this is a redistribution or not, we're just going to have to wait. But for now, it looks like we're going to come back down and test the $85,000 area. We can see this by looking at the stochastic RSIs here have been peaked out on the daily for Bitcoin for quite some time. So it leads me to believe that we're going to turn to the downside here not too far from now. It's likely that, again, if we totally reset the stochastic RSI, we come to the bottom of the box. We have a huge amount of support at the VPVR here, which we've been following for quite some time at around 84,000. I really didn't think we would come this low. I thought that this inverse head and shoulders that we were looking at on the larger structure was going to be a win for us. But if I were to revamp it now and just flatten everything out, because I had a slight tilt to the structures, it definitely looks like this turned into a distribution fairly early on, and it's this last final up thrust that we saw while I was kind of off offline there for about a month and a half there. This final upthrust into distribution structure and the LPSY that we looked at. So let's see, I think I have that drawn out still on this one. Yeah, here it is. Again, the kind of question that we're running into is, are we going to hit a repeat of the previous time we saw distribution turn into reaccumulation? And it looks like that might be the case. So I suspect that we push up into that $96,000, $97,000 area still. Seems the most likely. The VPVR is there for the larger time structure as well. But with the stochastic RSI on the daily maxed out like this, we're definitely coming back down to test the $83,000 area. If we can't get back above that 91,000 again and we hold below it, we could come all the way down to 69,000. If that's the case, most of the ETF buying took place there, and that would mean a lot of the huge players have taken profits. And those big players, if they can turn $1 billion into $2 billion for their customers, that's a huge return, 100% return. You do not get in the S&P over unless it takes a few years. So with Bitcoin and these much bigger players, we could be looking at just somewhat of a turn to the median for the ETF buying before going up higher again. And they do have that capital fiduciary responsibility. So like, hey, we're up a lot, especially in traditional market standards. So something to keep an eye on there. But for now, we're just going to see a continuation of this range take place. And then whether it turns into redistribution or reaccumulation, there'll be a few signs. I think the other one will be down here, that if we push lower into the spring at around, say, 78,000, and the RSI is still higher on the daily here, that I'm going to start leaning into reaccumulation, not distribution. It's always tricky to tell these last little bits of the market when volatility increases. It was so much easier, again, a bunch of months ago. The beginning of the markets are so much easier to spot than where we are in the exact end. So something to keep an eye on, but we're definitely closer to the end. So I still, there's a part of me that still believes we're going to hit that 150K area, though, that we reaccumulate here. We go up for one final fucking hurrah, and then we come back down and really reaccumulate between the 70 and $50,000 area. So I think it still might end up being right about the 150, 160K, but damn, this swift move down here I think has killed a lot of people's confidence, especially because on the daily here you see this consistent repeated test of the 200 and 314-day moving averages. And this is the first time we have not been able to close above them. So I suspect, again, if we hit that 97,000, when we jump back up and we can't hold the support of the simple moving averages, we're coming down lower for a little bit. But again, there's such huge interest in this as an asset. It does answers a lot of questions that the regular market has not found answers to yet. They're going to eventually have to just keep printing massive amounts of money. We're in a massive deflationary wave due to technology. So inevitably, they're going to turn the printing press back on and all assets will just scream effectively. But for now, we're going to have to wait and watch to see how the rest of the ETF selling takes place and whether this turns into reaccumulation and we get some type of bigger right hand head and shoulder or right hand head and shoulders like this kind of idea before coming down lower. So something to keep an eye on. Steve with the Arcane Bear, thanks for joining us. Sorry, it was took a little over 8 days there to make a video, but like I said, once a week at the bare minimum. You guys have I've got an email update coming your way as well too. So keep an eye on your email inbox, and we'll chat again soon. Thanks, Bear Family. See you again in the next episode.